This is going to be a really good video for you. I forgot to leave the link down in the description, but it's really easy to find it. It's Michelle Bowman's most recent speech. I'm not going to cover the whole speech. I just want to give you a couple of the highlights on here to talk about a way to understand the monetary policy from the Federal Reserve's point of view. Now, I know a lot of people don't want to do this, but we are not in charge of monetary policy. Government's not in charge of monetary policy. The Federal Reserve is. And when we listen to some of the things that they are talking about, it makes it a lot more sense on why it is that they are conducting themselves the way they are. If you want to blame it on outside forces that are not the economic forces that are underlying, that's fine, because there's plenty of blame to go around. But when you think you want to blame Trump for the way that the Federal Reserve is conducting themselves, you really have to listen to the Federal Reserve to realize that they are not listening to Trump at all, right? Now, there is the idea in which that they want to wait and see how it is that the Trump administration is going to be conducting themselves when it comes to tariffs, but they are not positioning themselves in any relation to any of that kind of credible threat. Now, this is something that I think is probably, and I'm going to start right at the very top with the most important part, because I don't want you guys to feel like your time is being wasted here, but to truly understand why it is that the Federal Reserve is going to pause, right? Why it is that they are going to back off on the interest rate cuts. Most people want to think that it's about Trump administration, tariffs, I don't know, inflation. This is what it comes down to. The Federal Reserve has a position in which that they are going to be either accommodating or restricting the economy. And if they are accommodating the economy, it's because they are below the neutral interest rate. If they are restricting the economy, it's because they are above the neutral interest rate. This is very difficult to understand. I know I'm not trying to talk down or anything like that, but the Fed funds rate at the position that it is supposedly restrictive. If it's restrictive, the inflationary scenario should come down. It slows the economy down, slows purchasing down, slows business activity down, and then the inflation should come down. But if they are at neutral, then everything is like what the sweet spot, right? It's neither too hot nor too cold. It's perfect, right? Below that, then they're stimulating, and this is the inflationary pressure that comes from it. This is what Michelle Bowman has to say. This was given when was this speech given? It was given January 9th, so literally just a few days ago. And it says this: the target range now reflects 100 basis points of cuts since September, right? So think about that. This is how much the Federal Reserve has cut. 100 basis point is 1%, right? Has cut 100 basis points since September. And the policy rate is now closer to my estimates of its neutral level, which is higher than before the pandemic. So now think about this. Why is it that the economy seems to be so resilient, doing so well? Everybody's questioning it. It's like amazing to people why it is that it's going this way. But very few people take into consideration that the neutral interest rate is rising, becoming ever closer to the Fed funds rate. And according to Michelle Bowman, it is within reason to believe that it's very close, if not at neutral now. This is exactly what she says. And the policy rate is now closer to my estimates of its neutral level, which is higher than before the pandemic. Now, one of the other things that she brought up, let me see here. Here it is. Okay. This is the other part that that the Federal Reserve is not as restrictive as people seem to think they are. Right? This is what she has to say. Given the ongoing strength in the economy, it seems unlikely that the overall level of interest rates and borrowing cost are providing meaningful restraint. You get that? See, this is why it's important to understand these speeches. Right here. Given the ongoing strength in the economy, right? Because it's not as restricted as a lot of people seem to want to think it is. Right? The neutral interest rate has risen, moved ever closer to the Fed funds rate, making the economy less restricted. Given the ongoing strength in the economy, it is unlikely that the overall interest rates, where they are at right now, and borrowing cost are providing any meaningful restraint. People seem to think that they're high, saying this is too high, this is too painful, this is like, slowing the economy down, this is going to create recessionary pressures, this is going to bring the housing market down, this is going to be all this bad stuff. And what the Federal Reserve is looking at is saying that it's not creating or not providing any meaningful restraint, right? So this is why it's important to understand these things. I did a video a long time ago talking about the neutral interest rate rising, making it ever closer to the Fed funds rate, meaning that the economy was less restricted and people would be looking at it going, why is it so resilient? It's because it's not as restricted as a lot of people seem to want to think it is. This is one of the other things that came from this speech. And like I said, I'm sorry I didn't leave a link down in the description. I'll go grab it. I'll give it to you. But this is something else that was said within the speech that I thought was pretty interesting. Michelle goes in to talk about all the employment numbers and talking about how, awesome it is. And then at the very end of like literally a page, almost 2 pages of talking about employment, this is what she has to say. In the meantime, given the conflicting economic signals, measurement challenges, and significant data revisions, I remain cautious about taking signal from only a limited set of real-time data releases. So basically saying after like all this, this is how they're looking at the employment numbers, ultimately comes down and says that it's BS. Literally, that's what she says. In the meantime, given conflicting economic signals, measurement challenges, and significant data revisions, I remain cautious about taking signals from only a limited set of real-time releases. You can't make this stuff up. This is important to break through this stuff, to break down, to understand, to break this stuff down, to understand it from their point of view. Like, we can look at it from any point of view we want. We can look at it like they screwed it up. We can look at it like they're being controlled or manipulated or whatever. But then we can look at their strategy that they have been talking about for literally decades now, and you can see it firsthand. Here's another thing. Mentioning of the credible threat. So a lot of you who follow me on this channel, you know very well the credible threat theory, right? Where they use their words to guide the markets, and that it's more important, that their words are more important than their actions are, and the expectations of their actions being projected through their words is what guides the markets. She almost admits that here, right? The credible threat theory. She says it right here. Future action should be based on careful assessments of ongoing and sustained progress in achieving our goals, and we must be clear in our communication about how further changes are intended to affect economic conditions. And that, although it's just a simple statement of we must be clear in our communication, it is not just that she must be clear, it must be very precise as well in what it is that they are communicating, because they will find that their communications can throw the markets way out of whack, right? And, especially when you consider how bad of a reversal of like mortgage rates that had taken place from the moment that the Fed cut. Like, the expectations coming from the market was that the reason that the Fed cut was because of a bad sign to the economy. And so you see mortgage rates actually moving up when most people were anticipating that the Fed rate cuts would actually bring mortgage rates down. Here's another thing. So kind of going back to that other statement, about the overall level of interest rates. This is something that she had also said that it kind of adds to it, right? And it's actually an extension of that. It's, what she had said just before that sentence. But this is pretty, like, when you put this all together, when you listen to like this, right? God, I'm having a hard time talking here today, guys. Okay. I also continue to be concerned that the current stance of policy may not be as restrictive as many see it. Given the ongoing strength in the economy, it seems unlikely that the overall level of interest rates and borrowing costs are providing meaningful restraint. So that's, again, like, we kind of already read that sentence, but that previous one about the being concerned about the current stance of policy not being restrictive as many people see it. And I think this is very important to understand on how it is that the neutral interest rate is affecting this. Because if it's not as restrictive as many people think it is, why? Like, I mean, is it like not restrictive because they have dropped it 1%? Or is it not restrictive because the neutral interest rate is rising? See, this is really where I think like most people are missing it when they think about where the Federal Reserve is positioning themselves. See, like a lot of times, the control in which that I think people seem to think comes from the Federal Reserve, much like control over mortgage rates, which didn't go the direction that people were anticipating, or the control over the neutral interest rate, which is again market perception of higher inflation and inflation expectations, which starts driving up the neutral interest rate, making it ever closer to the Fed funds rate, making the economy less restricted, and then people wonder why it is that we have such a resilient economy. So understanding this stuff in this fashion is really going to give you a better understanding of the monetary policy. See, if you want to blame it on like the Trump administration, like they're doing it because of Donald Trump, they're doing it because of Biden, they're doing it because of whatever, then you'll never see it this way. You'll never be able to see it in this fashion, directly communicated from the Federal Reserve itself. Like, I'm just somebody who's like interpreting this stuff, right? It's very complicated. They talk in Fed speak. It's not clearly, easily explained. But once you see it, and then you hear it, and then you recognize it, it's not so hidden anymore. It becomes very obvious. But if you're not aware of it ahead of time, it'll be hidden in plain sight. And this is where I think like this channel is breaking this stuff down in a way that is actually useful to you. Because once you can see it for what it really is, then you can take the appropriate position for yourself. I mean, nobody knows what you need in your life, your business, your retirement, your, getting started in life. Who knows what it is that you got going on? All right. Let's start talking some of these comments here. Thank you, everybody, for joining in on today's live stream with 181 people watching and 44 likes. Thank you so much for hitting the like button. All right, let's see here. Let's go back a little ways to Harry Chu. Trump beat the living crap out of Powell to the point where he literally said it's time to buy stocks. Okay. All right. That was funny. All right. All Nighter says, Steve, they can continue selling the long end of the foreigners to pay the debt foreigners will buy using a carry trade, in my opinion. Trump and Powell work together to gaslight the markets into expecting inflation. I totally agree with you, Brody. Steve, 40 trillion debt by the end of 2025 times 5% equals 2 trillion debt payment. Good luck with that. Dan Milliken, I'd like to know what UE thinks about Trump taking Fannie Mae private. I don't know. We'll have to see what happens from it all. Like, I mean, there's only expectations that can really come from it. But, just like any other government entity, wasn't it under government control after the great financial crisis anyway? So that wouldn't be like a new thing that had happened, right? It might looked a little different. But. All right, the beating was legendary. I'm not reading Harry stuff. Okay, let's see here. Dishes, hit the like button. Thank you very much, Dishes. That was gaslighting Harry. Don't take their threats. Okay. Mark with a K. Left or right owned by the tribe sheeple? Steve, there's a reason every fiat system in history has collapsed. We are nearing the end of this current one. Okay, I would agree Steve, except for the fact that we are moving into a digital component and that could possibly have a negative interest rate attached to it. Cashless society, digital component, negative interest rates, you might be able to carry this thing on a little bit further. And considering that the fiat currency that we are issuing is being backed by assets that of the government issued, if the Federal Reserve was to continue to buy assets of a foreign nation, who knows how far they could expand the debt issuance or the liability issuance of their Federal Reserve notes or whatever it is that they are going to back or use as an asset, as a liability for the assets that they have on their balance sheet. Did I make all that make sense? Anyway, too complicated. Let's reel it in a little bit. From an investor point of view, the interest rates are not restrictive. There's a reason. Oh no, we already did that. Okay, you should start a YouTube channel, Harry. From a homeowner point of view, the interest rates are restrictive. Commercial interest rates are dictated by the Fed. It's by the bank you are requesting a loan from. I have a short-term refi at 2.9. All right. Mark, are you preaching the choir saying such things? Here, okay. Let's cruise down to the bottom. All right. The Uneducated Economist, why does your roof liner stay on the roof? It's because this is a newer truck. This is my 99 Ford Explorer, my really nice vehicle that I have. All right. That stuff is unreal. All right. What info and data do the Fed use to come to their stance in their speech? Well, I mean, you can go and look at all the data that the Federal Reserve uses. In fact, there's pretty good charts on just about everything that you could possibly imagine. Just type in the word FRED, like the word Fred. Just put it in capital letters behind any chart that you would want to see. Type in like housing, permit issuance, put in, whatever, and whatever you want. And there's pretty much a Federal Reserve chart on it. So they have an insane amount of information and data and whatever that they have compiled and put together. Now, what it is that they are looking at and how it is that they come up with those numbers is beyond me, man. I don't know how they do it. Like, they got people out there who are doing surveys and, whatever, census, and I don't know, man. They come up with their numbers. At the end of the day, it doesn't really matter how they come up with those numbers. And it doesn't even matter if those numbers are real. And I know that's kind of odd to say or hear, right? But that's really the truth of the matter is it doesn't really matter what those numbers are because those are the numbers that they're looking at. Whatever it is that they are saying it is, that's what they are looking at. That's what they are going to use in order to conduct themselves, in order to make monetary policy. We could think of it being right, wrong, or indifferent about it or whatever. It doesn't matter. Right? It doesn't matter what we think. It's what they are doing that we have to understand in order to make our position in our life. And so understanding that these are the numbers, this is what they're talking about, this is what they plan on doing, and looking at it for that fashion, then you can understand how that monetary policy is going to react. How many people were just convinced that the Federal Reserve had lost control and that there was no way that, the dollar wasn't going to go into a hyperinflation scenario. And now here we are, months down the road, years down the road now, and the hyperinflation scenario is pretty much has vanished. Some people want to hold on to it. Some people seem to think that the Federal Reserve is still like printing money, and actually moving in a quantitative easing fashion. None of that has taken place. And so understanding how the Federal Reserve is truly operating will do you so much better in life than trying to think of how bad it is that they screwed it up. Right? They could be like, who knows? They may be screwing it up. Like, that's very well could be the case. But when you think about it in the fashion, it was just like, well, what are they going to do with interest rates? How do those interest rates really impact me, my life? How is it that they are going to be keeping those interest rates elevated? And why is it that these elevated interest rates don't seem to be as restrictive to the economy? And knowing that there's a neutral interest rate out there that is moving on an elevated inflation expectation, it's moving up. well, then all of it starts to make sense, right? It doesn't make sense until you see it, right? Until then, it just sounds like psychobabble, right? It does. But once you see it for what it is, once you recognize that, it's like, oh man, that's exactly how it's working. That's exactly how it's going down. And so you don't have to stress it anymore about, oh man, they screwed it up. What's the next crazy thing that's going to happen, right? Because there is going to be crazy things that happen, unforeseens that go on. But the next like chaotic event to be able to predict it due to the Federal Reserve screwing up, I think is probably a very long shot, right? I don't think that's going to happen. All right, moving on. I don't think he was being rude. I think it was a poor choice of words. Oh, I'm sorry. Did I mean rude? Oh, are we talking about Harry? Harry's kind of rude. No, I'm just kidding. All right, this government spending isn't really different from the QE, though same effect. I don't think it was okay. Perhaps, Dave. So, end usury on Fed-backed loans, a shared delusion. Please don't be rude to Simon. He does not need to be sharing his knowledge with us. What does FL say? The Uneducated Economist, speaking from a jerk standpoint. Oh, okay. Where do you see OSB and cost of lumber like 6x6 timber beams and going? Well, I mean, if you want to call me a jerk, you can go find the information from somebody else. I mean, that's just right. That's all. You want me to call me a jerk? Then I'll be a jerk about it. Go get the information from somebody else, man. You think you're so smart or whatever, then. It's a symbol of the crypto Cardano. All right. You can actually cut spending by 2.3 trillion by forcing an audit on spending, which Powell is in favor of. Hey, Jeremy, thank you so much for the $1.99, man. I really appreciate it. Put the money here or put the money there. The point is you don't need to add money in a sustainable economy. Well, Kevin, I don't think there is such thing as a sustainable economy. And the reason why there's no such thing as a sustainable economy is because there's either money pouring in or money leaving, right? So when new money comes into the system, what you're going to have is a separation between the rich and the poor. When new money leaves, right? Well, it's not even new money, that would be old money. When old money leaves the nation, then you will find people falling into misery and poverty. And it's one of those two directions. There is no such thing as a sustainable economy. Like you can't have it that way. That's like a perfect economy to have sustainable economy like that, right? It doesn't work like that. Perfect is not possible. Once you have achieved perfect, the moment that you are there, then you are trying to maintain perfect, which just proves in itself that it isn't possible to be perfect since you're trying to maintain perfect, which means that it's not perfect already if you're trying to maintain it. You're always in a case of imperfectness that you're trying to continue to be perfect. So sustainable economy is not in existence. It just happens to be a moment in time in which people can go like, oh, look, isn't this wonderful? Everything is going great. Good manufacturing jobs is enough to provide an income for an entire household. This is awesome. This is sustainable. It's not. The reason it's not is because what you are doing is you are in production and savings. And production and savings is eventually going to lead to increase in standard of living, where you'll be buying luxuries, and eventually the production of foreign nations will be moving in, domestic manufacturers will be moving out, and you will eventually get to a point where the money that you have all accumulated in saving is going to be moving out of the nation to buy the foreign production, and then you all fall into pain and misery. This is the way we do it. Right? And it doesn't matter how far back in history you go, you can find many examples of it taking place. To believe that you can keep it at a particular level is a communistic socialistic belief. Right? Don't let people move into luxuries. Don't buy foreign production. Government owns everything and limits the way that people behave. That's the only way that you can maintain the perfectness of sustainable economy. But it won't work. Because it's already been proven it don't work. So understanding that you're in a cyclical thing, you're in something that you have to be positioned for on account of where it is that we are inside of that economy and the history and the timeline of it. It's just better to see it that way. Most people want to control it. If you think that you can, if you know what created the problem, then you also have to understand that you can fix the problem, right? And so if you are going to fix the problem, then you have to go back and you have to look at what created the problem. And what created the problem was all these government decisions and these bad corporations and all these other people. And so now you got to sit there and vote for people who are going to change the way that people think about the corporations, the government, all this other stuff. And while somebody like me is going to sit back there and go, yeah, this is part of how the economic history goes down. Once these people were productive, once they have increased their standard of living, once they had this money, this savings, this ability to invest, men came in to say, hey, we need to govern this. We need to govern all this production and savings that's going on because you guys are so good at it. And because you need men that can govern it, they're going to abuse that power. And then we go, oh, it's their fault. Well, was it their fault or not? I mean, maybe, sure. If they were going to do it, I mean, it's our fault for letting it happen. How about that? We didn't have to use the Federal Reserve note. We don't have to use it right now. We choose to every single day. We go to work, we get the Federal Reserve note, and we bitch about the Fed. So it's like, I don't look at it as something that you can fix. It's not going to be something you can fix. You can go ahead and try and fix it. I'm on board. Let's do it. What's your idea? Right? Because no matter what it is, I'm still positioning myself for the cyclical thing that's taken place because that's the way I really see it. Right? And the whole political environment and everything that comes from it, this is just a side effect of it. It's secondary to the problem. And it's not a problem. It's just a cycle. And you just have to be in it. It's like bad weather a cycle? Is good weather, I mean, is bad weather, something that you cry about? No, it's just part of it. Eventually it'll be good weather, right? Right now it's sunshiny. It's awesome. All right. Just saying you can all stop using debt products, especially credit cards. I think that's the most righteous thing we can do. Lawn care lover, I totally agree in the sense that if you're using it for luxurious experiences, vacations, toys, stuff like that. But what if you used a credit card to go and buy a handful of 2x4s, to buy a saw, and to buy some screws, and you put together a picnic table, and then you sell that picnic table, you do 2 or 3 of those, and you're able to pay for not only the saw and the lumber and the screws, but now you're making a little bit of profit, and you wouldn't have been able to do it if you didn't have that credit card. Wouldn't that be a good use of a credit card? I mean, that's not a bad idea, right? I mean, that's something just about anybody could do. Even if it was a really like high interest credit card, you'd be able to get that thing, knock it out in 30 days. You might be able to pay that credit card off before you have any interest rates, charges. Have a business started literally off of a $500 credit card. I've thought of that many times. I even put a picnic table together just to see how hard it would be to do it and how much it would cost. Right? At the time, it didn't even seem that much. I think I had maybe $120 into it or something. I'm thinking, wow, this could be like maybe a $300 picnic table. I don't know, delivered. I got a little S10 right there. It could probably fit in there. Right? Business started right there off of a credit card. It's not a bad idea. It's how people use it. That's the problem. All right. Use a credit card to put the whole credit line in black. Double your money and pay the credit card back on. Keep some money for yourself. All right. Look at people with credit cards like a gambler. Just saying, for a while I was paying a whole lot of interest every month. Just finally got to the point where I'm keeping it paid off. Yeah, and I agree with that part, long care. It's the use of it. It's just like, to be honest, I have a credit card with a little bit of a balance on it now. I could pay it off right now, but I'd rather have the cash for it. Anyway, it don't matter what I put on it. And I agree. Like I'm looking at the interest payments and going, man, I should just pay this thing off, completely, and then not have the interest payments to it. But then I also look at the cash side of things, and I was like, well, yeah, but it would be nice to have the cash in case of, something was to come up. That would be that buying opportunities. So instead, I'm postponing the paying off of the credit card, which I could do, anytime I wanted, so that I would have the opportunity to do something else with cash if it was there. So may not be the smartest idea with it, but that's what's making me feel comfortable right now with it, and it'll soon be over anyway. Let's see here. I wake up each day and say, what do I really need to buy today to get through the day? Not much is true. Not much is the true answer, right? What do you mean by that, Joe? All right, keep it straight is a nightmare. Keeping it straight, yeah. It's pretty good for your credit score to use a credit card, but pay it off regularly, as I understand. Yeah, I mean, I don't know. I checked my credit score the other day. It was like 821 or something like that. Going from somebody who had, I don't even, below 600, it was five something. Who had a horrible credit score. I completely rebuilt my credit score using credit cards, And what I would do is I would take out a new credit card. I took out, I think, four credit cards. And I did them probably about 3 months apart, 3 or 4 months apart. And then what I would do is I would make like $100 purchases, and then I would pay all but $5 off on these credit cards. And I did that for like a year, and I would just make these payments, these small purchases, and just keep a $5 balance on it for like a year. And then I would pay them off. And that was what it did. And that's all I had to do. It wasn't nothing to it. I didn't even make that big of purchases with them. Okay. Dave says, Brody, I think what he means is I make $4,000 a year in benefits just using Business American Express. Yeah. Plus, credit card rewards are not taxable. Huh. I never thought about it like that. Let's cruise down. Kevin, I just respected communism and I still hit the like button because I know better. I use credit card points to get free internet and 2 homes. It's good strategy, Simon. Well, I don't know. We'll figure it out. I mean, it's just like the more I understand this stuff for myself, the more I kind of look out there, the wiser you get. The more you kind of get into your own ways and you start doing things, the way that you think is the right way, right? But it's more about running on instincts after that. Like you've had your experiences, you know what it is that's going on out there. You know what, your trials, what works and what fails. And so you start seeing things like, you start seeing things differently when you start taking in information when it comes to the economy. You just start looking at life differently. You start realizing things differently, knowing that there's changes going on out there, some stuff that is just not going to be fixed. Some people are not going to be able to come in and have particular laws that are going to make everything appropriate and right. And once you see it that way, it's just like, okay, now I know what to do about it, right? I can start positioning myself differently. Kevin Tweedy, the guy who threatens people. Okay, let's move down here. What do you think about quantum computer breaking, encryption, digital banking, and crypto? Yeah, I've thought about that too. And I brought it up to a few different people, and they had some sort of idea or something to fix that problem. I don't know. We'll figure it out. I mean, I guess if it happens and it destroys the whole Bitcoin thing, we can all go like, oh, that was so much for that idea. But if they do have a workaround for it or a fix or a figure out or whatever it is that they would do, I'm not a techie guy, so I wouldn't know. But it does seem to be like one of those, credible threats to the Bitcoin, to the Bitcoin protocol and use of it. All right. He needs to buy silver, platinum, crystallized awesome. It makes you nice. All right. Let's see here, Niels. Be kind, helpful, and grateful. Quantum computers aren't all that much of a threat. Yeah, I don't know, Brody. I'm not that smart about computers in order to say, yeah, they're a threat or not. I mean, I could see where they would be a threat, but at this point, I guess my concern over it is pretty low. Like I'm not that scared about it. Small minds talk about people, greater minds talk about ideas. Yeah, that's true. Assuming the network can be upgraded. Yeah. Do you think China can create its own foreign debt by issuing it from a foreign infrastructure projects? Well, I mean, of course they can issue out their own foreign debt. The problem with it is can they force people to trust it? Right? I mean, that's where it really comes down to. I mean, you can issue out all the debt you want, but you can't force people to use it or trust it or be confident behind it all. So I mean, what I guess if there was a time in history in which people started trusting China, which I don't know why people would do that, anything that has a China and any kind of product that comes out of China that's like a financial product like that, that's a debt bond, anything like that, of that, kind of thing, I wouldn't trust. And so, yeah, they can do it, but what difference would it make? You got to get the trust. That's what it is. You got to have the people's confidence behind it. All right, moving down here. All nighter. Why does everyone seem to attribute quantum computers to be negative to BTC, but never about how it could be positive for the network? Yeah, that's true. That's really true. Everybody does look negative upon it. Matt, good to see you up in here, man. I don't want any Harbor Freight bonds. Yeah, no kidding. I just said about that, Albert. Okay. 257 people watch, and thank you so much for joining in on today's live stream. We got 90 people with a hit and the thumbs up. 36 minutes into this live stream, we kind of got off base there a little bit. We were really originally talking about how the neutral interest rate is rising and getting ever closer to the Fed funds rate, which is making the economy less restricted. This is something that I had predicted a very long time ago with a wonderful video talking about how the neutral interest rate rises, and I did my little drawing out there on a piece of paper because I know you love it when I do my little artistic creativity, demonstrations on the not the whiteboard, but my paper notepad. But it was a really good video, and it did explain it pretty well. And I think that's actually taking place now today. So when we look at like the Federal Reserve and how it is that they are conducting themselves going into the future, I think it's really important to understand that neutral interest rate and how it is rising and how it is creating a situation in which that it could make the Federal Reserve want to either stall out or even possibly reverse their their Fed funds rate policy stance and not lower rates, but actually increase rates because the neutral interest rate is rising. Remember, they don't want to go past neutral. They don't want to go below it. That would be stimulating to the economy and therefore creating the inflationary scenario that they're supposedly fighting, right? So, anyway, I don't want to hang out here all day with you guys, although I'd love to hang out here all day with you guys. We got 254 people watching with 95 likes. Thank you so much for hitting that like button. We got $1.99 in super chats because you guys are always so awesome with those super chats. I'm going to answer a couple of more questions here. We'll take it to like 40 minutes and call it quits. All right. I was asking about how the Fed gets the data earlier to see if you could predict their stance on making trades before the press releases. I'm not into trade, so I wouldn't know how to use the information to try and find that kind of idea. Um, there's probably plenty of people out there who do stock trades, who do like, trying to figure out how to use it to make money. That's not me. That's not how I'm really doing this. What I'm using it for is to try and really figure out how it is that I want to position myself in my life with what it is that I'm doing for business, stuff like that. And I understand like for some people that might be the same thing as trying to make money, but making money on stock swings and trades and stuff like that, understanding the credible threat theory, understanding how the credible threat theory then guides market perception and what it is that markets will do with that expectation, that's up to you, right, to interpret how that works. That's why this channel is describing credible threats in the way that we do, is because if you're a stock trader, then you're going to have to take that information to figure out how to do the stock trades. If you're somebody who's working a factory and you're wondering how it is that your factory operation is going to continue, considering that there may be a movement of your factory overseas and you want to know why that's happening, it's a completely different use of that information. Right? Completely different use of it. But it may be the same thing that you're looking at when you think about how it is that the tariffs and the credible threat theory works, and whether or not you're actually going to have a job later on after this administration takes hold and starts inflicting some of the things that they have promised. These are, again, like, how it is that you use this information is completely up to you. Okay. Do you think the Fed will quantitative easing and buy mortgage-backed securities through to pay its debt? The Fed doesn't have debt. Like they have a balance sheet and liabilities, which is like, I mean, I guess that's their debt, right? The liabilities that are issued out there, all the Federal Reserve notes. But they have a balance sheet, right? Assets and liabilities. And they are not going to go into quantitative easing unless they are trying to do something like create a stimulating effect to the economy, lowering interest rates, creating like a environment in which that employment needs to be stimulated. That's the reason why they would do quantitative easing. Like, to just assume that they're going to do it is, a little short-sighted on it. You got to know the reasonings that would trigger them to do it, right? And that would be it, is like pretty much unemployment. Still nobody knows who Satoshi is. Brandon, they are pretty nice. Andrea got the memory foam mattress and furry handcuffs down there. It's pretty comfy. Interesting. Okay. Uneducated Economist, coming from Matt Bittner. It's interesting that the Fed cut, yet long-term rates have gone up despite the Fed cuts. Yeah, but we have to understand. All right, you guys hit me up with the super chats. That'll keep me out here. But yeah, we have to understand, Matt, what is the market perception of the Federal Reserve rate cutting? All right. Like, the Federal Reserve cutting rates and the interest rates moving up, that makes sense to me, because when the Federal Reserve cuts rates, what are they doing? They're cutting rates because the economy is bad. When you think about how heavy of an interest rate cut that took place, a half a point, right? That like freaked everybody out. They thought for sure that there was like, going to be an immediate drop to zero, that the whole economy was coming undone, that they wouldn't have done that much if it wasn't because of the bad times that are about ready to, that the Federal Reserve must see some bad times coming. And that's the reason why they cut so much. And when that kind of like feeling and expectation hits the markets, what do? They're like, well, if I'm going to deploy my capital, I want a higher return for it, right? That's what the markets think, because they saw the Federal Reserve stepping in a direction that says, hey, man, we may be going into bad times. Well, if we're going into bad times, most people don't, on a short term at least, don't want it to deploy their cash, out there. They'd rather hold on to it, saying, no, I'm cautious for it. So then you would start seeing the interest rates moving up. And it just happened to move up all along the line, too. Even especially, even going into mortgage-backed securities, which is typically more considered like, one of those longer-term bond kind of applications. But still in all, it's just the market's expectations and fear and anxiety of why it is that the Federal Reserve had done such a big rate cut. The recalibration, think about it. Or it was like, oh, we got to recalibrate. They moved 1 percentage point. And they're like, oh, recalibration is over. We were just a little too high. And it was like, and I'm thinking, well, wait a minute, guys. Your first rate cut, that big one that you made, still hasn't even affected the markets yet. And you're already like finished recalibrating. Like you've you fine-tuned it already, but you don't even know that fine-tuning hasn't even had a chance to tune into the market. Or into the economy. So that takes that'll happen over the next 6 months to a year before you see the first rate cuts, 6 months probably from now, really affecting the economy, right? But yeah, here they're done with their interest rate cuts. I just found that to be I found that to be incredibly amusing that they use those choice of words, because I'm thinking your first cuts haven't really had any chance to affect the economy, and yet your recalibration is over. All right, Dan Milliken, thank you so much for the $5. You guys are awesome. I've kind of pushed it out here a little longer than I was going to. We got 235 people watching, 111 likes. You guys are awesome for hitting that like button. $6.99 in super chats, because you guys are always supportive with those super chats. All right, one more question here. We'll call it good. Is there any other ways the Fed can control the economy besides interest rates, credible threats, and quantitative easing? Well, yeah, bipedal. Okay, so you have to think. That's a really good question. Okay, you're going to keep me out here for longer because this is going to take a while. It's better to understand how the Federal Reserve conducted themselves originally in order to understand how it is that they're doing things today, because 99% of the people believe the Federal Reserve is conducting themselves in this original fashion, right? And by recognizing that they had conducted themselves in this particular way, and I'll describe this way here in a second, by understanding it in this fashion, you can then understand that their communications about it will then affect the markets in a dramatic way, right? And so the economy is a different story from the markets. And that's another thing to think about. Like the markets is like the stock market. You see those numbers flying around, the Dow, stuff like that. That's the markets. The economy is you and me and the decisions that we are making, the businesses that we start, the investments that we make, the choices of where we live, how we do things. That's the economy, right? And if we decide to, hold on to our money, or if we decide to invest our money, whether we decide to take out debt, that's the economy, right? Markets are very different from that. Markets are reactive to information. The economy lags in time as those decisions need to be built up amongst all of us. Like just because they lower rates doesn't mean that every single person who is wanting to take a loan is going to go out and take advantage of that. It takes time. It starts with a few people, and the more people who are taking advantage of those lower rates will then start going into the broader economy and start having an impact of it. That's why there's a lag time that goes into it. So understanding how the Federal Reserve truly operated themselves in the original fashion, and now it's not even the original fashion, I'm just going to take it back to like prior to the pandemic, in which that they were in what they referred to as a limited reserve system. So a limited reserve system meant that at the end of the day, the big banks like the JP Morgans, Goldman Sachs, they would have reserves on their balance sheet, and it was a limited amount that was allowed out there within the banking system, and they had a reserve requirement saying, hey, you have to have so much reserves on your balance sheet or else you're not going to be able to operate the next day. So if you don't have enough, borrow them from the people who do. All right, so this was the overnight lending rate in which that the big banks would then borrow from the other big banks. Some of them had excess reserves, some of them were in need of reserves. The ones who were in need of reserves borrowed them from the ones who had excess reserves. That overnight lending rate was the effective fund rate. This is very important to understand because this broke down, right? This effective fund rate could then be adjusted by the Federal Reserve by buying and selling treasuries off these big banks to adjust the reserves so that the overnight lending rate would land within the target range, which is the Fed funds rate. They write that on the wall saying this is what we're shooting for. That overnight lending rate ends up being the effective fund rate. So if they need that effective fund rate to land within the target rate, they buy and sell those treasuries off these big banks. The reserve requirement then is adjusted, or the reserve levels then provide the interest rate level, right, for the overnight lending. So if there's a limited amount of them, the interest rates will go up. If there's an abundant amount of them, then the interest rates come down. And this is how the Federal Reserve would adjust interest rates. So if they wanted to, lower interest rates, they would, flood these banks with reserves. The interest rates would come down. The overnight lending rate would come down. And then therefore, after that, all banks would then be able to start lending out at a cheaper rate. So they could either lend to each other or they can start taking on risk, right? And so taking on risk means that, hey, they can offer a little bit better price because, hey, they just got a better price on the overnight lending. And so therefore, it just kind of goes off there into the broader economy. So this is how the Federal Reserve had originally conducted themselves for a very long time. Then September of 2019 hit, And something happened where there was a huge tax payment that had been made at the same time government spending was going crazy. So the big banks, JP Morgan's, Goldman Sachs, they're primary dealers, meaning that they go to the treasury at auction, buy the treasuries, and then essentially distribute them out there to the rest of the world. But they're the primary dealers. They're the ones who go to auction, buy the treasuries from the treasury itself, right? Buy the bonds from the treasury. Now, they were sitting on a ton of these things, which is just kind of like having cash, but it's not having cash, right? It can be used like a reserve, but it's not the same thing as when a debt payment or something of that nature is occurring. And when you have tax payments, that's done in cash. So, a huge corporate tax payment took a bunch of cash away from these big banks and sent it over to something called the Treasury General Account. So this all of a sudden, these big banks who were loaded up on treasuries had a little bit of cash, had the cash removed from the banks and or from this tax payment. It was removed from the banks and sent over to the Federal Reserve to this account, the Treasury General Account, which left the big banks very low on cash. And the overnight lending rate for cash for the reserve shot up to like 10%. This was a major problem for the Federal Reserve, for the big banks, and for the financial system had the Federal Reserve not stepped in with the repo facility. So the repo facility steps in and says, okay, here, what we're going to do is we're going to take those treasuries off your hands. Since the government's been doing all the spending, you guys are loaded up on these treasuries. We're going to take the treasuries off your hand. We're going to hand you a bunch of cash. That way you can operate the next day. We'll flip this and we'll just keep doing this every single day. We'll just keep making sure that we have, plenty of cash within the system. And this is what they refer to as non-QE QE, right? Or what we refer to as non-QE QE. They were referring to it as the overnight lending or reverse repo, right? The overnight reverse repo. So this is how the Federal Reserve was able to keep the liquidity going within the banking system, considering that there wasn't enough cash at that time and that overnight lending rate had shot up to 10%. They were like, nope, repo facility, no problem, pressure relief. Here's your cash. We take the treasuries, and this is the way we're going to operate for now on, right? Until further notice. Eventually, pandemic kicks in, quantitative easing, repo facility is now the main tool in something else called interest on excess reserves. So all of a sudden, these big banks had quantitative easing going on where that whole limited reserve system thing was no longer had a reserve requirement. The banks were loaded up on reserves with the quantitative easing that was happening. The reserve requirement drops to zero, and all of a sudden now the repo facility and the interest on excess reserves, which is an account at the Federal Reserve, is now the position that they are using to adjust the effective fund rate. So now when the Fed says, hey, we got the interest rates at, whatever, it's being channeled at the repo facility and the interest on excess reserves. So when we had all this quantitative easing, all this money being flooded into the system, and these big banks were just loaded up with all this cash, and that overnight lending rate was essentially useless because they didn't need to lend to each other anymore. All that excess cash shot over to the repo facility or the interest on excess reserve account. This channeled the effective fund rate for the Federal Reserve, and this is how they were able to establish interest rates within the economy. Everything after that would be taking on risk to you and me or whatever for businesses or houses or however it goes. So now here's the problem. The repo facility is becoming depleted, right? Eventually this is going to come to an end in that there's like this quantitative tightening is pulling the cash out of the system. So once it gets to a point where the repo facility is no longer used, how is it that the banks are going to end up operating? Is they're going to be back into what would be seemingly the limited reserve system. Now, we are not quite there yet, but it's like this transition, bank regulations, talking about the discount window as a tool for providing the liquidity to the banking system again. So now this is where this transition is starting to take place right now. We're not quite there, but it's happening, right? And so a lot of people are confused about this. But if the repo facility was essentially to be shut down, I don't necessarily think shut down, but just stop being used, because really it's a standing repo facility now. But if it was to stop being used and these banks are looking for cash, right, in order to do business, the discount window has always held a stigma saying if you go here to get the cash, then you are in a bad position. Like banks don't go to the discount window unless they are suffering, unless they are about ready to go under or something. Like they can't get cash anywhere else. So they're like, okay, well, if we can't get cash anywhere else, we can't get any other banks to lend it to us. We got to go to the Federal Reserve, go to the discount window to get the cash. The Federal Reserve is now trying to remove that stigma from the banking system by forcing the banks to use it. Like once or twice a year, they are literally forced to go to the discount window and borrow money. They have to have an account that's like set up, registered, ready to go. And by doing this, they are basically like hiding the bad banks, right? Because if a bank goes to it, they can't point the finger and say, hey, what are you doing going to the discount window? And be like, hey, we're kind of forced to go to the discount window. And so this is us being forced to do it. And then there's no question of it. And whether they're forced to or not, people wouldn't ask the question anymore because it's that, that's how they're, figuring out how to do the system, I guess. I don't know. Did that answer your question, man? All right. Let me ask, what was the question? Is there any other ways the Fed can control the economy besides interest rates, credible threats, and quantitative easing? Yeah, and I think that probably answered it, right? That was a good description, right, of what was going on. All right. I fully support end the Fed movement. What happens when there is no Fed, Simon? Okay, Crypto Beauty, that's a really good question. Are you talking like end the Fed and the idea of fiat currency? Or are you talking about end the Fed, the central banking system being a private organization, and then letting the maybe government have a central, like a government controlled central banking system as opposed to a privately held banking system? A lot of questions there about ending the Fed and what that would look like. Now, I imagine when I hear like end the Fed, it's end the central banking system in general, like no more central banking. The problem without having a central banking system and a fiat currency system and something to control the financial markets in the way that we do, if you don't have that going on, then what we're going to be left with is a commodity-based or a limited currency such as that of gold or cryptocurrencies or something of that nature, which is fine if you understand what's going to happen in that system, because what you're going to have is a massive separation between the rich and the poor, excuse me. As the people who have cryptocurrencies, people who have gold, will continue on with their luxurious experiences in life until they run out of gold, right? Until they run out of crypto. But the only way they're going to be able to do that, to continue to enjoy that sort of experience in life, is to be buying the production of foreign nations. It's not like they want to buy production of foreign nations. It's just that here domestically, we just don't do it. So if you're going to enjoy your life, you can either say, hey, I'm not going to enjoy things that are produced in foreign nations and just try and figure out how to enjoy myself without those things. Or you're going to have nice cars, nice TVs, nice things to enjoy. And by doing that, you are going to send the money out of the nation by buying that foreign production. Eventually, we all fall into poverty and misery. So, not looking forward to that kind of thing. Me personally would try and find a place that I could deploy that cryptocurrency, that gold, to make sure that I have a continuous return. So I would probably move it into production. If it was domestic production that I knew or felt comfortable with, being a sound investment, sticking around here, then I would probably do that. But that's the direction you're going to need to go in order to have that return on it. And considering that most people here in the United States live such a luxurious life without really producing anything, to try and compete against the rest of the world who is producing stuff at a much lesser standard of living, that's going to be a very, very difficult thing to operate in. A few 112-hour work weeks in your 20s and 30s will make the rest of your life easier. Yeah. What's the cheapest treasury bond to actually pay off for nobody? All right. Do you agree with the theory of banks need to be allowed to fail? I mean, me personally, I mean, if you're asking me personally, yeah. Like, I mean, I think you rise and fall on your own merits. But as far as like, what's occurring here in our economy, I don't think that's like something that'll take place, and therefore I don't expect it to happen, right? And I mean, whether it's a good or bad thing, it's not up to me to decide whether it's a good or bad thing. It's up to me to figure out what it is I do based on the idea that I don't think that they're going to allow a big failure of banks, and how it is that they're going to conduct themselves because they are not going to allow it means that I need to, figure out what it is I need to do at the time. A lot of people thought for sure, like before Silicon Valley Bank was going to fail, people were pulling their money out of the banks. They were pulling cash out. They could see it coming. They knew it, right? And I mean, even as they asked me, I did videos on this, right? They said, "Are you pulling your money out of the bank? Are you scared?" And I said, "No, but I probably should be." Right. And the reason why I wasn't scared to pull my money out of the bank is because the Federal Reserve was talking about it. They were talking about issues coming to the banking system, and that I mean, they didn't call them lifeboats, but for lack of better terms, I was calling them lifeboats. They couldn't talk about these tools that they could deploy. They can't describe them. They can't say how they would do it. They couldn't say what would trigger the use of these particular tools in order to deal with a banking situation where you had like the Silicon Valley banking crisis. They can't describe it because then the markets, the people will start to incorporate that into their investment strategies into the market. So they don't describe how these tools look. They don't describe what's going to trigger them. They don't describe any of that stuff, but they do talk about them being in the toolbox. Right? They say they have other means of dealing with the economy that they don't describe. So when people ask me, "Are you worried about getting your money or having money in the banking system?" And I was just like, "No, but I probably should be. I think it's a legitimate fear, but then again, I've also know that the Federal Reserve is going to have a lifeboat to deal with it. Is that my strategy? Yeah, kind of. It kind of is. Right? If I can find where the Federal Reserve is recognizing the problem and saying, yeah, we're developing tools to deal with it, then it's not that big of a problem. And it turned out that, yeah, it was a big problem. Not that big of a problem. All the deposits were protected. It got bought out by other banks, whatever. It was redistributed out there amongst the financial system. And although I'm sure a lot of people got hurt pretty bad by it, it wasn't an existential threat to the financial system. Right? Didn't affect me any. All right. Simon, have you watched Gary's economic videos? He describes what's happening, the corruption. No, I just watch my own information. And I don't mean to like talk negatively about it. I mean, I do watch the occasional videos and stuff out there, but I have developed such a different view of not only monetary policy, but economics and everything else that, I mean, I really honestly, I just don't know if anybody else has even come close to the information that I have. And I just don't like, again, I don't want to be sounding cocky or arrogant or something like that, but that's really just the case of it. Is just like nobody seems to talk about some of the information that I have. And so therefore it's just like I'm on my own. Like this is unique to me, and you know what I share comes directly from the Federal Reserve itself. Like I figured out their strategy in a way that I don't think anybody else has. You know? And so when they talk about the corruption and stuff like that, I mean, I've seen loads of it. I've seen it all over the place. The Federal Reserve officials are constantly being accused of insider trading and quitting their job because of it. Right before the pandemic kicked in, there was a few of them who totally got busted for insider trading. They were like, "Well, there's a retirement ticket to you guys. And we're out of here." And I'm like, way. This is really happening right now? It was just like these guys knew that this was all about ready to go down. They positioned themselves accordingly for it, made millions and millions of dollars off of it, totally got caught, and nothing happened. They're like, "You guys did this," and they're like, "Yeah, we did. See ya. We quit. Sorry. Okay, we resign. Our bad." Yeah, and nothing happened. All right. Gary Economics is good, but the Uneducated Economist has hit rate like no other. Yeah. Has a hit rate like no other. Yeah. Thank you. All right. Did you get a new phone, Simon? Your camera is looking crisp. No, I have the same old phone. I have the Samsung that does so well. It's got a cracked screen right now, which is kind of a bummer, but the camera is so good on this thing. And when it's like clear and it's sharp, man, it does really, really good. I'm surprised by how nice of a camera it really has. And I mean, it's like a 3, 4 year old phone now. All right. Should have joined the members only live last night. Oh, that's okay. And Dwayne Jones. Yeah. Last night's live stream was the mic on it was a little messed up. I tried doing the join, have another YouTuber join in. We had All Nighter join in on it. And I think that really kind of messed with the mic quality and the sound quality of it. So it wasn't that great of a video. I think the information within the video, if the speech, breaking down the speech got through it, I haven't reviewed any of it. I think the content of it was really good, but the sound quality was terrible at some point. Even Brody had mentioned it to me. Samsung phones kick ass. They really do. I've had iPhones in the past, and really, I think my favorite Samsung phone was the Note 10 that I had, because it has a little stylus that comes with it that you can turn the camera on and off with it. So you can not only take pictures, but then you can also start and stop the video camera with the remote stylus that comes with it. So that's pretty cool for that particular phone. All right. I need earbuds last night. Yeah. I can never part from my iPhone, but I respect it 100. Yeah, I liked the iPhone when I had it. And you know what I liked about iPhones is that everything about it worked. Like Samsung, sometimes you'll find like an app or something that you download is just not quite the app you were hoping for. It's kind of glitchy or whatever, as far as like, the Android stuff goes. But when it comes to Apple, man, like everything works. Like it works perfect. Like everything, like at least that's what I have found when I had it. It was just like everything that I had, but it was kind of limited on what it is that you got from it. At least that's what I found. All right. Brody, now the government needs the back, but the ones who have that money got given it for free will only return it in the higher interest. All right, guys, this was a lot of fun. Thank you for hanging out. 225 people, 151 likes, $6.99 in super chats. You guys are always so very supportive of the Uneducated Economist. I think this is a good video. Again, understanding the neutral interest rate, rising neutral interest rate, how that gets ever increasingly closer to the Fed funds rate, which makes the economy less restricted, is one of the reasons why we are experiencing some of the resilient economic effects within the economy that we are. Nobody really talks about this, but it is broken down in Michelle Bowman's speech. I will go get it, leave a link down in the description for you guys so that it's there for you. And thank you guys for being here. All right, Uneducated Economist. You guys let me know.